Meta is making what might be one of the single biggest bets in the history of business. But it's not on a new app, it's not on a sleeker headset. It's a bet on the raw, brute force of artificial intelligence. Today, we're going to tear into their financial reports to really understand this unbelievable spending spree. $72 billion. Just let that sink in for a second. That isn't some 10-year grand plan. Nope. That is the high-end estimate for what Meta is planning to spend in the single year of 2025. It's a staggering amount of cash, all aimed at building the literal foundation for what they hope is the future. So you gotta ask, right, what in the world are they building with all that money? And maybe the even bigger question is, can their business actually handle this kind of spending without, completely imploding? In this explainer, we're gonna follow the money and get to the bottom of this incredible gamble. All right, here's how we're going to break it all down. First, we'll look at the big idea behind this AI bet. Then we'll dig into where the money is actually going. Third, we'll see if it's paying off in their main business. After that, we have to talk about the black hole of cash that is Reality Labs. And finally, we'll size up the risks and the reality of this situation. Okay, first up, you have to understand this isn't just about buying a bunch of new servers. Meta sees this as a race to build the next evolution of intelligence itself. They're even using terms like superintelligence, essentially AI that's smarter than us. And wow, are they putting their money where their mouth is? And look, don't just take my word for it. This is pulled straight from their report to investors. They are telling everyone, point blank, the generative AI and this superintelligence mission are the reasons for the spending. They're basically saying, get ready, this is going to cost a fortune in data centers and really smart people. So let's move on and see what this epic vision looks like when it hits the spreadsheet. This is where the numbers just get, well, kind of mind-bending. Remember that $72 billion number for the year? Well, to get there, you have to spend at a truly blistering pace. This is what they spent in just the second quarter of 2025. $17 billion in just 3 months. That's the kind of cash they have to burn through just to stay on track. So where is it all going? This table says it all. In 1 year, the value of their physical stuff, we're talking data centers, servers, all the hardware, jumped by almost $26 billion. They are literally building a global AI factory. Now, when you buy this much stuff, you have to deal with a key accounting concept called depreciation. It's actually pretty simple. Just like the moment you drive a new car off the lot, it starts losing value, right? Well, the same thing happens to a multi-billion-dollar data center, and that loss of value gets counted as an expense. And here's why that matters. The more they build, the bigger this non-cash expense gets. Their quarterly depreciation shot up by almost $700 million in just 1 year. This is a huge depreciation headwind, as analysts call it. It eats into their reported profits, and it's a big part of the question, is this investment a brilliant move or a massive value trap? Okay, so with all this insane spending, is there any payoff? Is there a return on this investment? To figure that out, we have to look at the one thing that pays for everything else at Meta, the advertising business. I mean, this chart really says it all. Forget the metaverse, forget everything else for a second. 98%. That's how much of Meta's money comes from ads, period. For this whole $70 billion AI bet to work, it has to make that giant blue slice of the pie even more profitable. And here's the crazy part. It really looks like it's working. Ad revenue is up a massive 21%. But look closer. It's not just that they're showing more ads. The really important number here is that the average price per ad is up 9%. That is a huge signal. So why are advertisers willing to pay more for the same ad space? Meta tells you right here. They say it's because of ongoing improvements to their ad tools. That's the AI. The incredible infrastructure they're building is making their ads smarter and more effective. And that is the return on investment right there in plain English. But, and this is a really big but, it's just not that simple. Because when you look inside Meta, it's almost like you're looking at two completely different companies. You've got the hyper-profitable ad business, and then you've got Reality Labs. This slide just lays it out perfectly. In one single quarter, Facebook, Instagram, and WhatsApp printed $25 billion in profit, an absolute cash machine. In that same 3 months, Reality Labs, the metaverse division, lost $4.5 billion. It's a furnace. The ad business is literally funding the entire metaverse stream. And if you think that's a lot for a quarter, get this. This was the division's total operating loss for the entire year of 2024. Almost $18 billion vanished. I mean, the scale of this sustained investment into a money-losing project is just, it's almost unheard of. And they're not backing down, not even a little. The company has told investors straight up that they expect these losses to get even bigger in 2025. They are just stepping on the gas, all paid for by that incredibly successful AI-powered ad machine. And all of this brings us to the final section, trying to balance this incredible risk against the possible reward. Even Meta itself, in its own legal filings, admits there's a whole list of things that could totally derail this entire strategy. And this isn't just us speculating. These are risks that Meta is required to tell its own shareholders about. Their AI might not pan out. The metaverse products might just fail. Regulators could change the rules overnight. And a really big one, they might just not be able to physically build this stuff fast enough. This whole thing is a high-wire act with no safety. So at the end of the day, we're left with this one giant question. Is this $72 billion a year spending spree the price you have to pay to build the next great computing platform that changes the world? Or are we just watching the most expensive, most ambitious moonshot in corporate history? The financial filings give us the facts, but only time is going to give us the answer.